Tuesday, July 16th, market analysis. Stan Ehrlich, good morning. What do we got? 10:06 California time, just a little bit late. Now, I start out with the stock market indexes and go to futures, and sometimes cycles, forex, crypto, sectors, maybe even some other stuff. And soon I'll be detailing what I believe to be the move down into the October lows again. So I'll start out with the stock market indexes. We did have a bearish engulfing sell signal on July 11th on the E-mini. It did not work. The market has made higher highs since. As a result, I'm looking at this as a possible prelude, and I'm just making another red circle here to put above the, to the process of it topping out, which I do believe is in progress. Today, we have a doji. It's no higher or lower than yesterday's high or low. It is currently up about 20 for the E-mini. Nice, but not great. And I don't have the opportunity for a bearish engulfing because we didn't get above yesterday's high. Regardless, we are still overbought. We have made higher highs in price, but not in the oscillator indicator. So we have a divergence. These are signals or no indications, not necessarily a signal, that the market is trying to do something and may or may not succeed. So you keep an eye out on other types of downside breakouts or other bear signals that could, hopefully will occur soon. Those kinds of statements I've just made apply to the other stock market indexes for the most part with variations. Here's the 1-minute chart on the E-mini. Came up, didn't make it above yesterday's high, pulled back, overbought conditions on the daily data, and sideways. Spider, sell signal last week. Didn't work. We are now, and I should also do the same thing here. Click on that one, copy it, and just move it over. Sorry about the housekeeping during the recording, but no big deal. And I'm looking for a sell signal. I'm looking for a top. I'm looking for this thing to come down. Now, I have noticed in some other emails that I've received lately that a variety of other market wizards, soothsayers, whatever, are telling me that because of the size of this move, the steadiness of this move, essentially from last October, or maybe the last several months instead of a year, we have gone up into longer term, and I use daily and short term, but they're talking about weekly and even longer than that type of charts. Overbought conditions that we have not seen for years and years. Many, in fact. As a result, they are saying that this market is setting up for a big downside move. Here we have the convention. Here we have politics maybe coming into play. Maybe not, maybe. There's always that maybe. And things are setting up, in my opinion, to be exactly what I'm just mentioning. Whoops, I didn't like to do that. Let's go do it this way. Okay. I just don't see the beginning of it yet, but I am going to tell you when I do. I'm going to scream bloody murder, and I'm right often enough. We'll see. Now, that's the Spider Daily. This is the Spider 1 minute, not leading me to any particular commentary. How about the Qs? Now, the NASDAQ has been the leader on the way up, getting stronger, quicker, better, faster. The sell signals have behaved a lot better. This one worked very nicely. That one worked very nicely. It didn't change the trend, but it sure as heck provided a downside move that was very profitable. This one worked, probably not. Very small loss. We don't have any. We almost had one on July 11th when the high was extremely close to the high of the previous day, but not higher. Therefore, not an engulfing. If that had turned red like it did on the NASDAQ NQ futures contract, that one you'll see in a moment has been great. Now, it's just that the QQQ didn't do it. Its parent. Otherwise, it'd be doing very well. So here's the QQQ on the 1 minute. No signals, drifting down. Let's go to the NASDAQ. We have a higher high because the hours of trading are different. The NASDAQ trades 23 out of 24 hours a day. Last time I heard 24. And therefore, in the middle of the night or the previous afternoon, the beginning of a particular session, it made higher highs for the trend. The QQQ only trades from 6:30 California time to 1 o'clock California time, and therefore didn't have the opportunity to make that higher high. The NASDAQ did it overnight and already started to come down. NASDAQ signals, fantastic. Look at the detail here. Going to the 1 minute chart. On the 11th, we made at 5:40 a.m. California time, about an hour before the stock market opened, the higher high. Around 7:15 a.m., it had already dropped quite a bit and it generated a new short sell signal on the 1 minute chart for the NQ. Both the day trade scalp and the overnight position made money and got out the same day because of the size of the decline and the speed at which and the RSI levels that it reached. Done, gone, bingo, hooray. Two great trades within a couple of 3-4 hours or so. Now the signal has happened, and we set up an ER3 signal for the next 3 days. The next day, which is dated the 12th, Friday last week, we have a rally back up to the trigger line for ER3, right there, that line. ER3 got short. Market did rally a little bit more, but the trailing stop for the scalp and the trailing stop for the overnight did not get hit on the scalp, which came down like crazy. The ER3 scalp made very good money. That's the third trade from the same signal. And you're out at the close because you didn't get stopped out before the close. If we had, we would have hit the stop line and made it a little less money, but made money. Both ER3s get in at the same price and both ER1s get in at the same price. So here's our ER3 overnight trade. This green, come on, mouse, trade line is connected to the current tick and it moves up and down as we're moving, and connected to the entry price, and that's static. So the stop for the overnight, my default numbers, probably much too far away. I will change the stop to accommodate probably coming down as close as I can to this high right here this morning, which is about the price of $26.84. Now that will allow for a very tiny loss, nothing to, no damage done. Or because it has made new lows after that high, the STS yellow line, this one is going to come down more like this time frame right here. And after this high, it's going to start going down because of the way the market's moved, and maybe be locking in a profit. That'll be all 4 trades on the one signal. Good news. What I really want is for a close below 2336. And if it does that, we should be on our way down a lot. This is the middle of July. Last year, it was July 27th, I believe, that the stock market indexes generally, most of them on the same day, topped out. Some of them with bearish engulfing ER sell signals. Great. And went all the way down to the October lows. That's August, September into October. Now we have the middle of July. So you got 2 weeks to the end of July. Then August, September, October. We could be starting a couple of weeks or a little bit earlier than last year. Maybe. We'll find out soon enough. But normally, the decline into October starts kind of in September and goes down for a few weeks to maybe at the most 2 months. But we do see it, as we did last year, trend down for 2 or 3.5 or so months into October. Since 1997, I'm going to say, over 90% of the time, you have had a buying opportunity of some significance, sometimes not that big a deal, sometimes gigantic buying opportunity in October. This is good for scalpers, swing traders, investors, you name it. A bottom is a bottom, ladies and gentlemen, and a top is a top. And as long as you get those tops or bottoms, it just depends upon how long and you hold the trade and how you move your stop as to how much money you're going to make, because you can't get better than picking the top or the bottom. Next chart. The Dow Jones has broken the double top. So there's no double top anymore. I did get a sell signal on the high day on the first high of the double top. I got a buy signal on the bottom. Perfect. On the top. Perfect. A sell signal. Nope. Didn't work. And that was on June 28th. Now we're getting overbought, and more overbought. We are up to 91. I am just excited about what's about to happen. It rarely gets to the 90s and higher. When it does, it almost always, I can't use the word always because it's not true, but almost always there is the beginning of a big move down. And sometimes it is gigantic. RSI here on the date of July 27th. Okay, last year. That's when the YM Dow Jones had a sell signal. That's the one I was just talking about. And it turns out to be the top of a huge bull market up, a gigantic RSI high of about, I can tell you exactly, 89.53. It wasn't even above 90. Yeah, RSI high 89.53, almost 90. And it came down all the way into the October 5th and the October 27th lows. Unfortunately, 27th was not a bullish engulfing. October 22, the year before last year, it was across the board a bullish engulfing in everything. And there it is, October 13th. 3rd? 22, October 3rd. Whopper. Oh, I know what happened. There's the 13th. We also got in most indexes the 13th as the turning point for the ER. The Dow didn't quite make lower lows, and the 3rd of October was the signal for the Dow. It started a little bit earlier. Back to current. So, what can I say? Without sounding crazy, adamancy, I think we're this week, Going to start to turn down maybe for months into October. I would set alarms. I would want to know when this market starts to make lows lower than the previous day, lower than lows a particular several hours earlier, when volatility started to increase, when support areas start to get broken, a variety of types of tools to be convinced that the move has started. Everybody's different. Everybody's got their little tools, tricks of the trade, and so on and so forth. They've developed over the years. My number of years happens to be since 1971. 53, I'm guessing now. I've been watching the market, and a lot of these years, most of these years, analyzing it. All right. Everything from a hedge fund manager down to a runner on the floor of both the Mercantile and Board of Trade in 1971. Next chart, the Dow Jones 1 minute chart. I'll squish it a little bit here. Big rally up. Looks like exhaustion weakness. Looks like a little double top here only in the last couple of hours. Very unreliable, but they do happen. So this is the beginning of something, maybe, probably not, but to be watched. I'd put an alarm right there. And if the alarm went off, then I'd see how much, came down to there maybe. And this is the trigger point. If it gets below yesterday's low over here, that would generate a bearish engulfing ER sell signal because it's higher than the previous day's high by a lot. And it's way overbought at 91. And this is the Dow Futures YM. And there's the 1 minute chart on it again. Now the Russell, I got to keep saying these things, people. 91.69 RSI. Today, a new high almost since March. Okay, almost since March of 22. That's 2.33 years, approximately. Yep. Huge, long-term bullish breakout. But after bullish breakouts, you almost always have very soon, very quickly, most of the time, a correction. And it should be back to the beginning of this red zone at a minimum. But frankly, I think it's going to be back down to that high at 2187 and maybe nestled into these highs in here. So I'm going to say 2180 something down to, I don't know, 2119, 2120. And it should start very, very soon. This yellow line represents the high that was made way back on March 29th of 22, and we are almost touching it. Look at this. In the last 1, 2, 3, 4 days, this thing has gone up from 2066-ish to 2262, almost 66. Yikes. This is one of the sharpest, biggest, strongest rallies in 4 days this market probably has ever seen. Next chart. Russell, 1 minute, 5 minute. And of course, this last 4 days started right there at 5:30 in the morning. Some news that I believe it was the PPI, I think, that came out, and it just loved it. Okay, here we go. Bonds, firm, close to previous important highs. If they can close above 120.24, or let's call it 121, then we've got an upside breakout of some major significance and a perpetuation of the bull move, which started back April 25th. We all know that the news pundits are claiming September could be the first time that the rates start to actually go down for years. I don't doubt it. Markets move on anticipation, but reverse on realization. That's one of my favorites. So we're moving up, expecting September rate break. When it happens, it'll probably be what, a quarter to a half. And then there's going to be the question, well, how long is it going to be until another one? And the market will have moved up and profit taking will set in. And so you see a correction. Markets move on anticipation and reverse on realization. 10-year notes, new highs. Not by much, but it did it. It may not stay there. And if it doesn't close above previous highs, it could be a little bit bearish price action and have a small correction. There's nothing telling me that the bonds and the notes are topping out big time. It's only telling me that there's a little bit of a problem and there might be a little bit of a dip. Maybe some political rhetoric or, Fed rhetoric, Federal Reserve rhetoric, something like that, but nothing serious. And I'm still bullish on interest rate futures, point blank, and have said so for a very long number of months. We did get a signal on the bottom of the market. You'll notice on many of these charts, come on, mouse. I probably need to change my damn batteries. Here we go. So there's October 23rd, October lows again, but that really stands for the stock market indexes. No surprise, interest rates did it also. And way down to test that support level. And now a sell signal didn't work that well. Scalping worked great for this sell signal, but it didn't move it down like I was thinking to maybe 107 something. Instead, it held fairly well. I like the long side of the bonds. Timing is everything. I like to pick tops and bottoms. That's why I developed this technical analysis technique, the ER signals. And it's available for TradeStation and NinjaTrader. And it's used for scalping, swing trading, and position trading, all of the above, on stocks, indexes, futures, forex, crypto. Next chart, crude, new low for the move down. New low since a month ago. Approximately staying there. I'd like to see it a little bit weaker. Maybe it won't do it today, maybe tomorrow. And now the bottom of the support area, it seems highly likely 79.01. And I wouldn't put it past it to get it down 75, 70-ish. Take probably a couple of weeks. But that's the way it looks. Bearish on crude. Next, natural gas. Almost a new low. Yesterday it was. Yesterday was a breakout again to the downside. We did have a buy signal on Friday. It didn't work. I thought it was going to, but you got to trust your system, but your system gets you out. It better when it's not working the way you expect. And that offset had better be quickly enough, small enough, not as often as you'd like, to let the system over time make good money when this does. Next, heating oil. Sell signal on top. Now, for the first time, in a support area, oversold. First time since the beginning of the month. Actually, the beginning of June, when it bottomed out. So, bottom of support area, oversold. We might have a bounce here. I can't tell if it's going to turn around and make new highs again. Not sure about that. But having a bounce soon from approximately these prices, I think is going to happen. Next, we're overbought on gold. It came all the way up extremely close to making a new high for the trend for August gold. Super close. Is this going to be a very rare triple top? Because they're very rare, I got to say it's unlikely. I got to think this thing is going to shoot up another few days more. 25, 2,500. I can't tell, maybe even higher, but it's close to topping out. Whenever I see yellow on rallies, I think watch out. It's fairly soon, time-wise, going to top out, but it could shoot up more in price. Best I can say at the moment on gold. Silver. This possible head and shoulder top is still okay, but the sooner it starts to close lower and lower and lower, the better as far as I'm concerned. Now, this shoulder seems to be about 2 weeks, and that one took about 2 weeks, so I'm not concerned about the balance. The double top, which is the top of the head and shoulder top, also took a couple of weeks. So there's symmetry there. I've drawn in the neckline. I've got the downside objective forecasted. All we need is for it to start dropping. I'm not short yet. I didn't get a signal yet. We're not overbought yet, but we came super close, which is not bad. Ladies and gentlemen, remember on the way up, you get overbought more frequently. Now, that created 2020 hindsight retrospect, the first shoulder, down, oversold. Then still a bull market, going up, made new highs, got overbought again. Got overbought again. Came down. Now we're starting to go up again. But is this a turning point? It didn't go up as much and for as long as the other rallies that created the shoulder and created the head of the formation. So it's not unusual to see the market not get overbought on the last shoulder. That is not unusual. That's exactly what's happened. It came very close, which is fine. I just have to see the right kind of price action for me to scream bloody murder. Last shoulder high intact, ready to go down. Next chart. Platinum. We've already done about the same thing here, almost exactly. First shoulder, overbought, pulled back, support held nicely, got oversold one day, turned all the way back up, and then we got a sell signal on the very highest day. You know, if you've been watching this, and you don't have to, go back to my recordings on this day before, 2 days before, the day of, the day after, and you'll hear what I had to say. It's the same thing I've been saying for years, actually decades. It got to my writing 5 different technical analysis market letters over my career, and the ultimate, I was a hedge fund manager also. Besides being a commodity broker for years, a stockbroker, and a president of a forex trading firm. All right, enough said. Now, we did make a minor new low for about a week and a half, 2 weeks this morning. This is not particularly good for a head and shoulder top to do. It has already come back all the way to higher on the day. It's up 1.7. Only if this thing turns back down again, ASAP, will I continue to like what I see. But I don't like this much strength in this current low having been made, coming very, very close to breakout levels. There's a question mark flying around here at the moment. So we'll see what happens. Starting to get above this rally high, 1050, kills the whole damn thing. And I certainly would not like to see it close above 1020 or even 1028. But it kills the whole thing, definitely, if we close above 1050. Next chart. High-grade copper. I'd love to say this is a head and shoulder, but there's too much wrong, so I can't. Way, way, way too lopsided. If you were to look at this chart right about there, then you might think that this is the shoulder, the head, and this is the last shoulder. but it's kind of feeble. And when it did break out, it got kind of funny here when it came above the neckline. And of course, all of this kills it. That's not supposed to happen. So for high grade, I'm bearish because of the extreme overbought conditions. And remember, these numbers are very, very high. 87. It's not that it has to be at 90. It's just that the closer and closer you get to 90, or when you are or above 90, you should have your finger on the button. You should be watching as closely as possible, or have something like the ER signal strategy doing it for you. And you don't have to watch. That's the whole idea behind algorithms. You don't have to be there to watch. But like myself, and I've developed this for over a decade, I don't trust them. I watch them, but I just do like to sit there and make it, let it do it itself. It removes the human being from the equation. You are your worst enemy. Your emotions, your greed, etc. Your emotion, the fact that you're human like myself is not good for trading. High grade, I'm getting a little more bearish. I need to see it, how it handles the support area, and then we'll talk about a lot lower. But I'm in favor of going down more. Soybeans, oil, meal, corn, wheat, cattle, hogs, then we're done. So soybeans are really, really oversold. 16. The same thing applies to 10, by the way, or lower. And if you look at when the market got down to, say, 11 or 10, it bottomed out and then tried to again. That's certainly not what I would have expected. I would have expected a much, much bigger rally. Didn't happen. How low did it get down here? 16. And here, divergence, bottom, new low in price, but not in the indicator. And up we went for a very good move. This is about to turn back up. It's going to turn back up to 1105 and maybe up to 1140. Really soon. Next, oil, soybean oil. Now, my cursor's acting a little funny. Rally today, not much, 22 ticks. I'm not sure. I got to wait. We have two levels that are critically important. The one that's the most important by far and away is the bottom of the support area at about 42.5. Closing below that, it's hugely bearish. Just like I've gotten beans, and I'll show you in corn, and I believe wheat has just started, and oil hasn't, and meal hasn't either. But I think they're all going to be very bearish. 3 out of 5 have done so already. Wheat was the latest one the last couple of days. We'll see it in a minute. I'm going to pass for a comment at the moment for oil today. Meal, new lows for a while, staying that way, dropping down some more. And today we do have at the moment, bullish engulfing, but because it wasn't oversold below 25 on my custom RSI. And by the way, this is available, $99 a month. And it does give you the signals in all daily data charts, stocks, commodities, forex, you name it. You can see the green and red bars, sell signals, green bars, right there, green for trades. So this could be used, but you're not going to get the automated trading. That requires the strategy. This is just an indicator. It just tells you what to look for, and then you have to do everything on your own. But it does correlate with what is built into the strategy. Okay, because indicators and strategies are much different. Strategies can make their own decisions and trades. Indicators just ring a bell And when you hear the bell, something's happening, but you have to do it yourself. Now, I'm still looking for the downside objective of 325 to be reached. Next, corn broke out to the downside on, well, convincingly on June 28th. All month long, 2 weeks now, it has just failed to have any kind of a decent rally, including what I thought was going to be a good buy signal on Friday, which did not work. But I got to point out something. Although we got below Friday's low on Monday yesterday, and it closed below previous lows, normally that's super bearish. But today we're coming back up a decent amount. Not to change the picture. It doesn't turn me friendly, bullish, or anything like that at all. If we start closing above 405, that's going to be a different story. So I'm still bearish, looking for a lot lower levels, and there's not very much support or resistance that you can look at here. It's just a free fall until I get signals. Now, RSI did get down to 11 a couple of weeks ago. We're not there now, and we got new lows since, so there's a divergence. There is an outside chance that you're building a bottom here, but I don't see the price action to justify it. Next, wheat. Excuse me. Friday, on the close, broke out. It just did. Monday, big down day. Yesterday, closed on its lows. Today, again, another down day of size, and for the first time in weeks, oversold again. This is doing the same thing that corn has done and soybeans. So I think I'm going to get more downside follow through, and I'm not turning bullish. I'm only claiming there could be some sort of rally, probably back up to resistance, and it's substantial. That would be 555, and I'll tell you maybe 566. Cattle. Can't really, for the last several days here, come to any kind of major conclusion. I'm favoring the bear side of the market a little bit, but there's some conflicting intermediate to longer term signals. I'm always looking at charts from a longer term standpoint for the most important thing, the major trend. But I know what tops look like before, during, and after they occur. And that's what I'm trying to pick for you guys. I saw the overbought condition. I saw the fact that it punched through resistance but came down very badly, and I said so on that day. And that, I said, is not bullish at all. In fact, look what happened next. Collapse. And so far, 2 days later has been the lowest low, and that was 5 days ago. 6. Creeping up. I think this is going to break out to the downside again. And Miss Piggy, the double bottom, we got 2 great lows, lasted a few days each. They weren't profound long term, but they made some very good money. Lately, last Thursday, oversold again, only 1 day's worth. That's all it has to be. In fact, the oversold condition basically means that you were oversold, could have been oversold only on the low tick of the day. And the rest of the whole day, and the whole day will be painted yellow, and the RSI would be painted yellow, because at any point during the day, it's not the close, but it could have been, you were oversold. So up we go. Now we have a challenge and a tiny new high for a couple, 3 weeks. This looks like there's something going on for a possible bottom. I really can't be very sure of it. If we start to close above 92.5, then I'm going to start talking about being bullish longer term. Right now, 62 RSI, it's undecided. Back to the E-mini, getting firmer, looking at the short term, 1 minute, excuse me here. I'm got to get this damn, excuse me, to the current quotes. There we go. So I'm waiting for sell signals. You guys have a great day. Profitable trading to you.